Let's not sugarcoat this. Your worst trades didn't happen because you lacked strategy. They happened because you ignored it. That stop loss you moved just this once? Mindset. That trade you chased because some dude on Instagram flashed a $5,000 gain? Mindset. The time you swore never again and 5 minutes later, guess who's clicking buy? Yeah, mindset. Mark Douglas, also known as the godfather of trading psychology, said it best. The consistency you seek is in your mind, not in the markets. We love quoting him, but living by it, different beast. In this episode, we are skipping the fluff and going full frontal with the facts, not motivational memes, not armchair philosophy. We are talking science, behavior loops, real-world sabotage, and how to stop lighting your trading account on fire with your own emotions. This isn't therapy. This is mental bootcamp for traders who are tired of punching themselves in the profit and loss. Let's go! Back in the day, when shoulder pads were big and risk management was just a 5, trading education was all about charts, candlestick patterns, technical setups, Fibonacci spaghetti. Nobody talked about the mental meltdown that happens after 3 losses in a row. Emotions? Please. That was for poets, not traders. Then came Mark Douglas, and he flipped the script. He said, trading wasn't about what you knew. It was about how your brain handles not getting what it wants. 80% psychology, 20% strategy. To some, that sounded radical. To others, it sounded like a personal attack. But here's the thing. He wasn't wrong. And today, we have got the receipts to prove it. Cognitive behavioral therapy is in trading education now. Traders wearing heart monitors? That's a thing. AI analyzing your fear patterns? Also a thing. Mark cracked the door open, and the industry stampeded through. Self-sabotage in trading isn't just a bad habit. It's a statistically measurable behavior loop. Study shows 8.5% of traders consistently undermine their own profits right at the finish line. Not because they are dumb, because their emotions override their discipline. Let's talk about the illusion of control. A study from MIT showed traders wildly overestimate how much control they have over the market. Spoiler alert, you don't. That fake sense of certainty, that's what leads to oversized position, premature entries, and good old-fashioned regret. Now, sprinkle in some social media. A 2023 study found that exposure to other traders' success spikes risk-taking and tanks satisfaction. Translation, that $10,000 screenshot you saw didn't motivate you. It destabilized you. But here's the plot twist. These patterns can be rewired. Simulated trading plus emotional reflection equals more resilience. That's not just feel-good advice, that's behavioral science with a trading plan. Tell me this, what's the weirdest thing you have done mid-trade to cope? Did you meditate while revenge trading or eat instant noodles over a red candle like it was your last supper? Scream, I am the market at your cat? Let's hear it. Best comment wins emotional closure and pretend therapy made of broken resistant lines. Mark Douglas didn't have the only make, but definitely dropped the first one. Since then, the real pros have been backing him up with megaphones. Peter Brand, the man's a trading fossil, still crushing it. His advice, respect risk like it's your full-time job. And guess where that respect starts? Yeah, mindset. Then there is Brad Steenbarger, clinical psychologist, and trade whisperer. He says sabotage show up when your emotional needs hijack your trading plan. You say you want consistency? Cool, but are you secretly addicted to adrenaline? Want financial freedom? Or do you just want to feel alive during the lunch break at your soul-sucking job? These experts agree. Trading isn't just about knowing what to do. It's about figuring out why you still don't do it. Let's talk about a walking cautionary tale. Nick, listen. Homeboy torched Baring Bank, one of the oldest bank in the UK, by hiding trades and doubling down like a casino junkie. He knew the rules. He just emotionally refused to lose. That's not lack of skill. That's textbook self-sabotage. But honestly, you don't need a headline collapse to see this. Just scroll through any Reddit trading thread. I knew I shouldn't have entered this, but... Ah yes, the universal trader anthem. That word, but... is where the sabotage lives. It's not about ignorance, it's about impulse, fears, ego, proving something to no one in particular. Until you name that emotional pattern, it will continue to rerun like a bad sitcom with your money as the punchline. That's why tools like journaling, mindfulness, and accountability groups aren't soft, they are mirrors. And some of you all haven't looked in one since your third blown account. Time to bust some myths. Myth number one, self-sabotage means you lack discipline. Reality, it means your emotional wiring is running the show. This isn't a try harder thing. It's a get to know your internal landmines thing. Myth number two, mindset comes after strategy. Nope. Mindset is the table the strategy sits on. Two traders, same setup, different result. Why? One panicked, the other didn't. Myth number three, Mark Douglas wasn't a trader, and Steve Jobs didn't code. You don't have to do the thing to understand the psychology of the thing. Look, Douglas didn't have peer-reviewed studies in his back pocket when he wrote Trading in the Zone, but now we do. And guess what? The science caught up. Turns out he was right before it was cool. Here's the truth. No one wants to print on a trading hoodie. You don't need a better strategy. You need a better response to yourself. Think in probabilities. Detach from outcomes. Respect risk, not just your head, but in your gut. And remember this, self-sabotage doesn't make you a bad trader. It makes you a human with a keyboard. But if you ignore it, that keyboard turns into a weapon and you are the one pulling the trigger. You want consistency? It's not about control. It's about surrendering to uncertainty. Mark Douglas handed us the blueprint. Modern science gave it a tech upgrade. Now it's your move. You're not blowing trades because you don't know better. You're blowing them because your mindset isn't aligned with your method. Emotional regulation isn't soft, it's the strategy behind the strategy. Tools like journaling, coaching, and simulation are your early warning system. Use them before your account becomes the lesson. Stop letting someone else highlight reel mess with your risk profile. Stay in your own lane. Consistency isn't control, it's emotional surrender. And that's how you stop self-sabotaging your trades. Before you open another chart and convince yourself this setup is different, pause. Hit that subscribe button so you don't miss the next episode and end up explaining to your spouse why you need to refund the account again. Comment below with your biggest sabotage moment, like the time you went long, the market goes south, and you went full Greek strategy on your keyboard. We all have been there. Drop your horror story. We are building a support group in the replies. No judgment, just sarcasm and healing. Share this with the friend who swears they're finally figuring it out every other Thursday. And yeah, buy me coffee because I don't revenge drink and your support helps this channel stay emotionally stable. Finally, if you're serious about upgrading your brain before your broker upgrades your margin call, come find us at starseedfx.com. Get your free trading journal. Build your mindset muscle. Because you are not just managing trades, you are managing the human running them. Let's stop the sabotage. Let's trade like pros.